Hi traders, welcome back to another exciting video, and I especially welcome you back to the Forex Geek channel. In this video, we're just going to be diving into one of the most straightforward yet powerful trading patterns that you want to have in your toolbox, okay? And that is the first green day pattern. All right, now this pattern is actually a great way to spot potential reversals or trend continuations, especially in forex trading where timing is everything, right? So by the end of this video, you'll know exactly how to identify the first green day pattern, understand why it works, and learn how to incorporate it into your trading strategy. So stick around and let us get started. Okay, let's just kick things off by defining the first green day pattern. Now, the first green day pattern occurs when a bullish candlestick appears after a series of bearish candles, all right, or a prolonged period of consolidation. So those are the two scenarios where the first green day pattern appears. All right. So this green candle signifies renewed buying interest. Okay, renewed buying interest, indicating that the market might be reversing or gearing up for a larger trend. All right. Now, why is it called first green day? Why is it called the first green day? Because it's the first significant sign of a bullish momentum, right? The first significant sign of a bullish momentum in what could otherwise be a downtrend or flat market. Okay, so it's an easy to spot signal that's widely used by traders to time their entries. All right. Now, this pattern is applicable across various time frames, from hourly charts to daily and weekly charts. So whether you are a day trader or a swing trader, the first green day can give you valuable insight into market sentiment. All right. Now, you might be wondering, why does the first green day pattern work so well? It's all about psychology, actually, right? It's all about psychology. So after a period of selling pressure, for example, like what we saw here, right? After a period of selling pressure, a green candle, or rather, a bullish candle, right, can signal that buyers are stepping back into the market. So this shift in sentiment often creates a chain reaction, all right? This shift in sentiment often creates a chain reaction as more traders take notice and join the buying momentum, right? So it's also a great way to catch reversals early. While other traders may wait for more confirmation, spotting the first green day can give you a head start. Of course, like any pattern, it's not foolproof, okay? That's why we always pair it with other indicators for confirmation, right? So let us get into the nitty-gritty now, shall we? So how do you actually spot the first green day pattern on your charts? The first thing is to look for a downtrend or consolidation. You can see this is a clear downtrend where you had a series of bearish candles, okay? Then you have to watch out for a green candle, all right? So, after you have identified a period of bearish price action or sideways movement, actually, this sets the stage for the pattern. You have to watch for a green candle, keep an eye out for a bullish candlestick that closes higher than the previous days or sessions close, okay? So actually, ideally, that green candle should close above the previous day's high, all right? The previous day's close price. Okay, the previous day's close price. So you can see that this particular candle, you can see this was remember that this is our open price. This is sorry. This is this is the open price. This is the close price because this is a bearish candle, right? So this is the close price. This is the open price. This is the high, right? The upper wick. The upper wick marks the high, and the lower wick marks the low. So this is the open price, this is the close price. Now the green candle ideally should close higher than the previous days, or rather the previous sessions close. So you can see that this candle closed higher than the close of this red candle. Okay, so this is the hallmark of the first green day pattern. And then pay attention to volume. Okay, if possible, check the trading volume. Right, higher than average volume on the green day adds weight to the pattern. Okay, signaling that the move has strong backing from market participants. Okay, so for that purpose, I'm just going to add the volume indicator to the chart, and you can see that right at the formation of the green day, the green candle, you can notice that there was a spike in volume. Can you see that this was the highest volume over this period? Can you see that? So this green candle, this first green candle, you can see how the volume was high. So it adds to the validity of the signal. And then consider the context. Okay, the first green day pattern works best when combined with other factors like key support, right? Key support or resistance zones. Okay, and also pay attention to oversold and overbought conditions. So you can decide to add the relative strength index, add it to your chart so that you can pay attention to overbought and oversold conditions. Okay, this increases the likelihood of a successful trade. Now that you've identified the first green day, what's next? Okay, let's talk about how to trade it. For your entry points, a common strategy is to enter a long position once the green candle closes. Alternatively, you can wait for a slight pullback on the next candle for a better entry price. Then for your stop loss placement, always protect your trade. So place your stop loss below the low of the first green candle. Okay, this actually minimizes your risk if the pattern fails. And then combine with other indicators to improve your success rate. Use the first green day pattern alongside other technical tools. For example, the RSI showing overbought and oversold conditions. And you can also add a volume indicator, giving you ideas to increase in volumes around the times of the formation of the candle. All right, and then set realistic profit targets based on nearby resistance or previous highs. Okay, always plan your exit strategy in advance. Now, before we wrap up, here are some quick tips to get the most out of the first green day pattern. The first is to be patient. All right, not every green candle is the first green day. Okay, so look for the right setup in the right market conditions. Secondly, always test your strategy. Practice identifying this pattern on a demo account before applying it to live trades. Okay, and do not trade in isolation. Use this pattern as part of a broader trading strategy. Okay, always consider the overall market context and combine it with other tools. All right, and there you have it, the first green day pattern explained. This is a simple yet effective tool for spotting market reversals and continuation opportunities. If you found this video helpful, make sure to smash that like button and subscribe to the channel for more actionable trading strategies like this one. Don't forget to hit the notification bell so you never miss an update. Let me know in the comments, have you used the first green day pattern in your trading, or is this a new concept for you? I'd love to hear your experiences and answer any questions you might have. In the meantime, thank you for watching, and as always, happy trading.